Salary. Now, gratuity part. Under Section 10, Subsection 10 of the IT Act, gratuity means a certain monetary benefit granted by employer for the appreciation of service of employee who had served continuously more than 5 years from the date of appointment without a break of service not more than 3 months. What's the tax treatment for gratuity? For government employee, actual gratuity received, less exemption under Section 1010, 100% exempted. So the taxable portion will be zero. For non-government employee, there is two options are there. Number one, when covered under Payment of Gratuity Act 1972, actual gratuity received less exemption under Section 10, Subsection 10, 15 by first one, 15 by 26 part of last drawn salary. What is 15 by 26? In every month, 30 days, but for the gratuity, when covered under Payment of Gratuity Act, 4 Sundays were excluded. That's what 15 by 26 into last drawn salary into completed years of services. Here the rounded off years. If an employee worked 19 years and 8 months means that 8 months, it is more than 6 months, more than half year. So it will be rounded off as a full year. So 19 years and 8 months will be accounted as a 20 years. Second one, rupees 20 lakhs is a ceiling amount for the gratuity. Third one, actual gratuity received. Out of these three, which one is least was exempted from actual, balance only taxable. When second option, when gratuity not covered under Payment of Gratuity Act of 1972, the actual tax provisions may change. Actual gratuity received less exemption under Section 10, Subsection 10. Off, that means 15 by 30 into average salary. What is average salary? Average salary means the salary for the past 10 months received preceding the month of retirement by 10 months into completed years of service, no rounded off years. It's the main difference between the covered and the not covered under the Payment of Gratuity Act. And second one, rupees 20 lakhs. It is a ceiling amount. It is the same for both the cases. Third one, actual gratuity received. Out of these three, whichever is least was exempted from actual, balance only taxable. Let's see practice 1. Mr. Kunal Singh, a government employee, retired from service on 31st August after rendering service for 32 years and 3 months. He received a gratuity of rupees 7,20,000 or 4,50,000 or 9 lakh or 10 lakh, whatever may be, is a government employee. So, computation of taxable gratuity of Mr. Kunal Singh, actual gratuity received, whatever may be the amount, was fully exempted under Section 10, Subsection 10. So, the taxable portion will be zero. In the same pattern, the listeners can practice exercise 1. Let's see practice 2. Mr. Kumaravel, a private sector employee who is covered. When studying the problem itself for the gratuity, we should understand whether he is covered under Payment of Gratuity Act or not covered. In this problem, it was clearly stated that he is covered under Payment of Gratuity Act. Retired from service on 31st December after rendering of 32 years and 9 months. 9 months. So, more than 6 months. So, the total number of years of services be considered as a 33 years because he is covered. Okay, right. He received a gratuity of rupees 14,50,000. His salary at the time of retirement was 45,000 per month. Find a taxable gratuity. Let's see the answer. Computation of taxable gratuity of Mr. Kumaravel, who is covered. Actual gratuity received 40,50,000 less exemption under Section 10, Subsection 10, 15 by 26th part of last drawn salary into completed years of service, 32 years and 9 months, it will be treated as a 33 years. Amounted 8,56,730. Actual 14,50,000. Ceiling 20 lakh. Whichever is least was exempted from the actual, so balance only taxable. In the same pattern, the listeners can practice exercise 2. Now, we'll go for practice 3. Mrs. Ramadevi, a private sector employee who is covered under the Payment of Gratuity Act, retired from service on 31st August after rendering service for 30 years and 2 months. Who is covered but services 30 years and 2 months only, not more than 6 months. So this should be ignored. We have to consider only the full 30 years of completed services. She received a gratuity of 12 lakh. Her basic pay at the time of retirement was 33,000 per month, and DA, which is farming part, rupees 6,000. Farming part means it will be treated as a DNS pay. So DNS pay means just like basic pay. So the total basic pay will be 33 plus DP6. Totally 39,000 will be considered for gratuity exemption purposes. She also received 2 lakh as gratuity from her former employer. Any amount received from the former employer was not taxable. Find her taxable gratuity. Let's see the answer. Computation of taxable gratuity of Mrs. Ramadevi, who is covered under the Payment of Gratuity Act. Actual gratuity received 12 lakhs. Less exemption under section 10, subsection 10. 15 by 26th part into last drawn salary. Basic 33,000 plus DP 6,000, totally 39,000. Into completed years of services amounted to 6,75,000. Or actual 12 lakh or ceiling 20 lakh. Out of these three, whichever is least, 6,75,000 was exempted from the actual amount of 12 lakh. So balance 5,25,000 was taxable in the hands of Mrs. Ramadevi. In the same pattern, the listeners can practice exercise 3. Now, shall we go for practice 4? Mr. Pandian, a private sector employee who is not covered under the payment of gratuity. The problem itself, it was clearly stated that not covered. Retired from service on after rendering services for 18 years and 8 months and 12 days. That months and days will be ignored when the employee is not covered under Payment of Gratuity Act means. So we have to consider only the full completed years, only 18 years for the tax purposes. He received a gratuity of 5 lakh. His basic pay at the time of retirement was 28,000 per month, and he get DA 2,000 per month, of which 70% forming part. Find his taxable gratuity. Let me see the answer. How to compute the taxable gratuity of Mr. Pandian, who is not covered. Actual gratuity received 4 lakh. Less exemption under section 1010. 15 by 30, that means off, into 29,400 means average salary. How to compute average salary? Average salary means salary for past 10 months of retirement by 10 months. His basic pay 28,000 plus DA 2,000, out of which 70% only forming part. So 2,000 into 70%, 1,400, it will be treated as a DNS pay. So 28 plus 1,400, totally 29,400 will be treated as his average salary. So off into 29,400 into completed years of services, only 18 years, because he is not covered. Amounted 2,64,600. Or actual 4 lakh or ceiling 20 lakh. Out of these three, whichever is least, 2,64,600 was exempted from the actual receipt of 4 lakh. So balance 1,35,400 was taxable in the hands of Mr. Pandian. In the same pattern, the listeners can practice exercise 4. Now, practice 5. Mr. Nirmal was an employee in a company who is not covered by the Payment of Gratuity Act. He submits the following information. Basic pay 20,000 per month, DA 5,000 per month. He retired from service on 31st December after 32 years of services and received a gratuity of 4,60,000. His average monthly salary for the last 10 months was 18,000. He also received 2 lakh from the unrecognized provident fund as a member of URPF. In this problem, not only we are going to compute taxable gratuity, we are completely going to compute taxable salary of the year of Mr. Naresh. Basic pay 20,000 into 9 months. Why 9 months? Because he was retired on 31st December. So April to December he got the salary. So basic pay 20,000 into 9 months. Next one, DA 5,000 per month into 9 months. Next, gratuity received 4,60,000. Less exemption under section 1010 is not covered. So 1 by 2, that means 15 by 30 into 18,000. What is 18,000? Is average salary was given in the problem itself. Into completed years of service 32 years. So off into 18 into 32 years amounted to 2,88,000. Or actual 4,60,000 or ceiling 20 lakh. Out of these three, whichever is least, 2,88,000 was exempted from the actual amount of 4,60,000. So balance 1,72,000 was taxable. Last one, amount received from URPF being 50% considered as employer portion. So total amount 2 lakh. Out of 2 lakh, 50%, 1 lakh was taxable in the hands of of employee. So the gross salary will be 4,97,000 less standard deduction under section 16 50,000. So balance 4,47,000 was taxable salary. So in the same pattern, the listeners can practice exercise 5. Okay. Bye. We'll see in the next video about pension, the tax treatment of pension of an employee. Okay. Bye.